All right, hello traders. It is Thursday, July 11th, 2024. Red background because we lost some money today. We actually lost over $400 in this account. Yeah, 400. So a losing day today. We're going to talk about that because I'm going to share wins. I'm going to share losses with you. Did not have a post for yesterday's trading. And yesterday was a fantastic day, up 1,300, almost $1,400. But today, I didn't post that yesterday, but I'm posting today. We lost $471. I'm going to cover that, talk about that with you as well. We've got a whole nother video I want to cover on chasing shiny objects, but I don't want to get into it because I got a bunch of stuff I want to cover today. So I'm going to cover why we lost today, why we violated not necessarily a rule, but we really didn't trade the way we should have traded today because I was dumb. And I really didn't follow kind of my own charting knowledge. I kind of went against myself, and it cost me a little bit today. So we lost a little bit of money today. Not a huge deal, but it's always frustrating. But you win some, you lose some. And it made it worse because I was out walking my dog trying to close a trade while holding a leash in one hand and trying to close. And I got some slippage on that as well. Anyway, I'll talk more about the shiny object chasing later, but in a nutshell, and I'll do it in a whole nother video, but in a nutshell, what I was noticing last night was, we're kind of remodeling our house. I shouldn't say we are remodeling the house. There's a lot of construction. We're kind of confined to our second floor and probably sitting in the bedroom, watching TV, watching some soccer there. And I'm just scrolling through, Facebook and Discord and just looking at different trades and always trying to learn something, watching YouTube videos of some good people out there that I'm always looking to take on some new knowledge, and you should as well. And one of the things I noticed in the Facebook group was every time somebody posts, hey, I've won 10 times in the last month, or I'm having a great first half of the year, all of a sudden there's 50 posts. What are you doing? What are you trading? How are you trading that? Okay, because everyone's attracted, like moths to a flame, to the shiny object. Okay, if you're always chasing the shiny object, okay, you are going to fail in trading, 100%. If you're trying to figure out why somebody on YouTube made some money for the last 6 months, the last 2 weeks, yesterday, whatever, if you're trying to chase people saying that they're making money and they're doing well, which there's plenty of people doing that, and you're going to chase what they're doing. What are you doing? How are you doing it? How are you entering? What are you doing? How does that work? Okay. If you're doing that, okay, you're going to become an inconsistent trader. Okay. You're never going to have a strategy. You're never going to have a plan. You're never going to stay disciplined. You're not going to stay true to your plan. You're always going to be an absolute disaster and a mess of a trader. Okay. You have to find what works for you. I've landed on what works for me. It's a good handful of strategies. There's some other spec type things that we do. Okay, but for the most part, we've got our 3 or 4 core strategies that works 90% of the time. And then there's some spec trades that we will do. Maybe we'll do some 0 DTE. Maybe we'll do some put credit spreads. Maybe we'll do some naked puts. Maybe we'll do some covered strangles. Those are all small spec trades, and I keep them very, very small. But stick to your core. Okay? You want to experiment with some of these other things, you got to keep them low, but don't just change and overhaul your whole trading plan. All right, so let me get into, we're going to update our account live for you here. And I want to talk a little bit about what's going on in the market. And I want to share with you some of my concerns about where the market is right now. I think today was a really, really good day in the market. Would have been a good day in our portfolio had I not made a stupid trade that cost me some money today. Other than that, we would be up, and we put some trades on this week that I think are really going to pay off for us. And we closed some winners today as well. So it's all good, great stuff. So I'm excited about where we are, and I'm excited that hopefully the market's going to pull back 300, 400 points or more. Okay? But hope is not a trading strategy, so I can't really hope the market's going to do that. But if it does, we are going to make some money in these accounts. So I really love the way we are set up. So let's jump into our trade tracker. Let me share that with you. And I'm going to update it live with you. So let's go ahead and update today. We ended up today with our Delta at 417, so dropped our delta a little bit. Still very delta neutral at 0.08%. We ended our theta today at 1471. We did put 3 new trades on, technically 2, and we took 2 off today. So we've increased our theta, but just a fraction out there. Our net lick did drop today, 528,557. Okay, and our BP usage dropped as well, 307,166. All right, so there we are on the day. And yes, there's our $471 loss on the day. Frustrating. And we'll talk about that. However, we are still up 27% on the year. So we're on pace for a 50% plus gainer this year. We're going to make more if this market starts going sideways and down. We're crushing the S&P by over 10% right now. Actually, we're at 27 versus 17. That's not really a 10% difference. We're actually up almost double the S&P, not quite. So we're beating the S&P by what, maybe 80% technically. All right, so let's take a look at what we did today, and I'll explain what happened in our trading. So first thing that happened today was after the CPI report came out, things took off a little bit. Gold continues to make a little bit of a run here. I like gold. I love the gold charts. I think it's potentially breaking out to the upside. I like gold. This looks pretty good. We managed to close a naked put trade at 40%. We were only in that trade for 8 days. So 8 days to make 40%, 5% return on capital in 8 days, basically a week to make 5%. Okay. If I was one of these YouTube gurus out there, I'd probably post the fact that I'm making 250% a year on my trades because I can make 5% a month or 5% a week. Sorry. Anyway, and then bonds. Bonds also moved nicely higher on the session today. Good bond move. What'd that do? Stopped us out of naked puts on bonds too. Didn't stop us out. I'm sorry. We took profits there at 44%. 13 days in that trade to make 5%. Okay, so I guess that's a failure. We only made 120% annualized. But again, you can post that up on YouTube and probably get 90 more followers or something. Anyway, 2 winners there. However, here's the loser. This was a 0 DTE trade that I got sucked into knowing better, and I didn't follow didn't follow a couple things correctly here. So number one, entered this trade around 11 o'clock while the market was falling. I even told members that a call credit spread was the play, but I thought maybe it had gotten away from us because we were dropping so much after the initial open. But I called out a call credit spread, but did I trade that? No. I took a quick look at the chart and I saw that we were moving lower, but we were hitting that 3 ATR band, which means I thought, oh, maybe we're getting oversold. And I looked for the market to make a little bit of a reversal, which it started to right around 11, but only 1 or 2 ticks, okay? Only 1 or 2 ticks on the 3-minute chart started to reverse, so I sold a put credit spread. The bad thing about this trade is this was a winning trade had I let it go to the end of the day, but you can't. You got to stop out and stay mechanical and do that. But essentially what I did was I entered too early. I did not see the signs on the 15-minute chart of a reversal in the day, which didn't happen till noon. At noon, that gave us the perfect entry sign to put a put credit spread trade on, and that would have been a winning trade. So I had the right trade. I had the wrong time because I didn't really follow my own advice, and I jumped in too early. I didn't wait until I actually saw the MACD and RSI reversal starting to happen. And one of my rules is, even though we may go past the 3 ATR band, I probably could show you this on a chart, but even though we may go past the 3 ATR band on the chart, if the 3 ATR is either moving up or down by like 45% or so, and you're just riding that down, we don't place a trade. Okay, that's not overbought or oversold on that. So a couple good lessons in there for me. I almost always follow my plan pretty well, but sometimes you just make that trade and it just wasn't the right idea. We never really got to an oversold RSI reading, but we did reverse on the stochastic momentum indicator, which is one thing we watch, as well as the RSI. They both reversed right at noon, and that's where we would have entered. The day was pretty much sideways to up from there, and we would have been fine. So our process is right. Well, we didn't follow the process, so I took a bit of a loss today. What made it worse was I want to get out at a 200 or a 2x loss, and while trying to trade on my phone and walking my dog and talking to my business partner on the phone, I couldn't get the trade placed correctly, and it went past my stop and went a little bit further. I still got out, but I got out at a much bigger loss than I wanted to. So anyway, a couple things there. However, we only ended the day down $471 in realized gains. Hey, you win some, you lose some. Look, I lost one last Friday. Okay, I lost one a week before. I had a losing day, a week before. Look at these days. One thing you'd notice is that most of these losing days have all been Fridays. I need to avoid trading on Friday because Fridays, which is the yellows here, which is the end of the week, Fridays have not been a good day for me in the market. I probably just need to not even turn on the computer for Friday. This time we did it on Thursday. Okay, so we'll see. Otherwise, would have been a nice day, and we probably would have been pretty doggone close, or we would have been close to probably a new all-time high today, had I not had a 0 DTE loser. Anyway, that loser on 0 DTE took us down into negative territory for the month. I'm sure we'll make it back, but we've only had one other losing month the entire year. So we'll see what happens. We're still, we've still made $8,600 on 0 DTE. Anyway, so that's all good. One thing I wanted to share with you today, though, is what I'm seeing in the market. It's not anything new. It takes no genius. Okay, you just got to be looking, and you just got to pay some attention to what's happening out there. So let me share some charts with you, and we'll take a look at what's going on. This is why I think it's a little dicey out there to be getting long. And we talked about this in depth with members yesterday, and I placed some trades. I placed some XL111 trades, and I have some other XL112 trades that I'm setting up in a bearish trap / hedge type mode. And I put a new style hedge on this week as well. So I've added a new hedge. I've added some trades that are bearish in nature. That if we start to go down, are going to start to pay off significantly for our account. So I love the way we're set up. And you saw the fact that our theta or our delta is pretty flat anyway. And I would expect that our delta will continue to look pretty good with what we have set up. But let me share the screen with you guys. And let's take a quick look at the markets. And I'll get off the screen so you can see everything. All right, so here's the ES futures, and we're just going to really focus on the weekly. I don't really care much about the daily. I just want to see what we're doing weekly and then potentially what we're doing monthly. So here we are, and we know we've been overbought for long periods of time before we started to tip over. We had a 3-week pull down, and then we rallied again from that after we bounced off the 21 EMA. Okay. Get overbought, sell off. Get back overbought, sell off. We have never been even close to oversold except for back in like October of last year. We're nowhere near the 21 EMAs on either the daily or the weekly, so there's really no reason to get super excited, except we are starting to see this, turning over here on the RSI and maybe the MACD. So maybe we're going to get a little bit of a pullback here in the short term. The question is, where does that pullback come down? I really want us to hit the 21 EMA, which is around 5,300. Okay, that would be a 350, 400 point drop from here on ES. Okay. That will probably wig out half of you that are not going to expect something like that. But I really want like an 8% drop, but I just don't need it in one day. And today was not a huge drop in one day. We only went down less than 1%. on ES. So it wasn't a huge down day on ES. On the NASDAQ, you went down over 2% because you got murdered on the Mag 7. So your big name techs got beat up heavily. You had Apple down almost 2.5, Microsoft down 2.5, Amazon down 2.5, Meta down almost over 4%, Google down 3%, Nvidia down 5.5%, Tesla down 8% today, Netflix down 4%, Costco down 4%. Okay, AMAT down, AMD down 1%, Qualcomm down 4%. So all your big name stocks took pretty good hit today, okay, but they're not really close to their 21-day moving averages on the daily or the weekly. Okay. But one of the things I like to look at is the put call ratio. And this was something that I have learned in the past. So let me get to this grid here. Let's take a look at it here. So let's zoom in. Well, I won't even zoom in. Let's just take a quick look at this overall. And this is something I really got from John Carter many years ago. But looking at the put call ratio, and you can see I've got a couple different things on this chart. So this is a daily view of the put call ratio going all the way back basically 2 years to 2022. So here's in the bottom here, you're seeing the SPX. So this is the S&P down here, right? So you're seeing the S&P and below, and then you're seeing the put call ratio up here. It's oscillating, so it's an oscillator. And normally you're going to see it staying below 1 and above 0.7. Okay, that range contains almost all of the time for the put call ratio. But here's what we want to look at. We're looking at the 10-period simple moving average, which is the white line. This is the 10-day moving average. When this is rising, the market's falling. So you can see here, if we drew a trend line from these lows back here, and we looked at this whole piece, okay, all the way to here, right? Look what happened in 2022, starting from January, where it hit the low. Okay, this was way below the 0.7, which is a pretty bearish reading, okay, on the put call ratio. That means there's, a little bit of an overbought market. All right, so we're down here, and now we're reversing, and you can see the 10-day moving higher, and it comes down and bounces, but it keeps just drifting its way higher along this trend line. Well, as this was trending higher for an entire year, the market was drifting lower for the whole year. Okay, then in 2023, okay, after we also had a little bit of a down and an up, but as soon as we hit this top here in 2023, we started to sell off on this trend line coming down on the put call ratio, and the market trended up at the same time, okay, all the way to August. In August, well, actually not even in August, back in July, we bottomed below the 0.7, and we started to reverse our way higher, and we did that all the way to October, okay? So for all of August, September, and October, we moved higher on the put call ratio, and the markets drifted lower. And then you hit this over 1, which is an overbought reading, and then you drifted down, and you're still drifting today. And now, over the last several days, not only have we been trending down, which means the market's been trending up, okay, we now hit some pretty extreme low levels. I mean, you are now seeing the low on the put call ratio that has not been seen since January of 2022. And what happened in January of 2022, okay, that was the start of a year-long, basically, bear market. Now, am I calling for a bear market? Not necessarily. However, what I am saying here is the bottom's not in yet. You're still falling. okay, which means the market can still continue to get a little bit overbought here on the market. Well, this thing might start to curl up like it's just done. So you can see that today, yesterday, and today, we finished the day with a higher put call reading, which means you're starting to get a little curl here, okay? On this 10-day moving average, it's starting to curl up. I would say if we get another day or two moving higher, or even a week moving higher on this, okay, that should be a negative for the market. That should signal that potentially we have at least a bit of a pullback coming. Now, does that pullback just come down, tag the trend line, and bounce off of it, or go back and tag the 21 EMA or something? That's fine. Okay, I would be fine, and then we bounce higher. Makes me a bit nervous that we're such an extreme level, and the last time this happened was 2022. I am not calling for the great bear market of 2024, the second half. However, things don't look perfectly great out there. And the other thing, this is not a main indicator for me to take a look at, but if you follow the Buffett indicator, okay, and if you follow the Buffett indicator, you can do it in a couple of different fashions. I typically look at it from currentmarketvaluation.com. You can search for the Buffett indicator and it'll tell you how it's done. But essentially what it does is it takes the total US stock market value and divides it by the GDP. Okay? So when the market's getting overvalued, 50-some trillion dollars, way over the annualized gross domestic product, okay, you start to hit some pretty extreme levels on this. Okay, you are way above. You're now 2 standard deviations above the historical trend line. Okay, when that happens, okay, the markets are getting overbought. Now, can they stay overbought? Sure, we've been overbought on this market, okay, since back here, somewhere in about 2014. Okay, there's long periods of time going up, okay, on this thing. But you can see when we hit some of these higher values, like we did in 2000, okay, or like we did in 2022. 2022, extreme level, rolled over, and you know what happened in 2022. What happened in 2020? What happened here in 2008? Okay. So you can see that when we hit some of these peaks and roll over, you can have now some of these have been shallow, so again, nothing to fear, but this is 2 standard deviations right now above, okay, the historical trend line, okay? So we are definitely overvalued in here. So again, is this the end-all be-all indicator? No. Essentially what we're looking at here is the market's overvalued. The put call is at an extreme reading. The Buffett indicator is at an extreme reading. I would say it's just prudent to exercise some caution, which is what we have been doing all week this week, right? So we've been putting on trades that have a heavy trap or bearish component to them. We've been putting on hedges this week. We're not changing and altering our campaign style trades. We're not doing any of that, okay? What we're doing is we're shaping the overall portfolio. We're moving away from some of the, in fact, if I can share, okay, I'm looking at my allocations here, and ES is only 23% of the total account. Okay, so only 23% of my account, and I share this periodically, so you guys have all seen this, but ES is only 23% of the entire account. It's not even half the account. So if the market really starts to sell off, well, not even a quarter of my account is in the S&P. 18% is in bonds. Okay, bonds are going to love this kind of stuff. Okay, I'm still very bullish on TLT. I'm very bullish on bonds. I added more naked puts on bonds today. I have plenty of TLT trades on. So I'm fine. I think bonds go up. I think rates will come down. Okay. I'm also heavy into oil, 17% on oil. Oil, kind of loving this move. Okay. Oil's been in a pretty good bullish trend. I'm also 11% in gold. And I love gold. We added another naked put in gold today after taking a win on a current naked put, and gold looks like it might be breaking out as well. Right? Then I'm in the the euro, the Aussie dollar, and then a couple other little things in here. And then bill is also, so treasury bills is also 17% of my buying power. So again, I just want to make sure that you guys understand that it's not all about chasing the shiny object and ignoring what's going on. I'm simply, and I'm not playing the news. I don't even know what the CPI was. Okay, we had plenty of members talking about the CPI and what they felt that was going to do. Again, stop. Your opinion does not help anybody trade. Opinions do not help your trades. Okay? Stop having an opinion and look at the chart and trade what you see. What do you see in the chart? And I just showed you. What do you guys see in the chart right now? What do you see in this chart? I see an overbought market that's still rising on the weekly, but rolling over on the daily. It's still strong, but it's a little toppy, and we have a very, very distinct shooting star inverted hammer candle starting already this week, that if we don't have a big rally tomorrow, this will be a pretty good reversal candle right here. That's also not a great sign. So if we start to sell off next week, which is possible, okay, you're going to see people start to scream in pain because their market's down 2%. If you took a hit today, okay, it's not like you didn't see that it was overbought, okay? But yet you kept buying stuff, right? I'm adding trades that I think are going to complement my overall portfolio, not adjusting my 112s, and they have traps anyway, okay? I'm not getting super crazy on adding standard 112s. No, what I am adding is adjusted 112 style trades, lower credit, bigger trap, anticipating that maybe we get a little bit of a market pullback. Do I think the market's, I think we're heading into a recession. I've been of that mindset for a year now, and we haven't done it. Okay. However, at these extreme readings on the Buffett indicator, typically a recession follows almost every single time on those. So you got to just keep an eye on some of the things. It doesn't mean it's going to happen. You trade what you see and don't guess. Just trade what you see, which means don't go crawl into a hole because Tom said, market's going to zero. Okay. It means start to be a little more cautious, but don't change your whole trading plan. I didn't change my core strategies. All I'm doing is with extra BP that I have, I'm shaping the overall look of my portfolio a bit. I'm moving away from some of the ES bullish stuff. I'm adding larger trap sizes, larger PDS trades, and a little bit of a different hedge style in there. If we look at oil, looks pretty bullish. Okay? If you look at bonds, I think bonds look pretty good. It wants to break this symmetrical triangle to the upside. Okay? It's getting to the point where I don't know if I want to keep selling Strangles in here, but I will for now. Okay, gold. Look at it, broke out of this. We've been talking about this volatility box for weeks and weeks and weeks, folks, and it broke out today. Big breakout on gold today. I think you now have the momentum. Squeeze is tight and ready to fire. If gold gets going, this thing's going to rocket. I think new highs in gold are around the corner. So I like where gold is. The Aussie dollar cranked up today and then sold off a bit on the session. And the euro kind of did the same thing, but they broke out of these ranges and ran higher. It's all good. Okay. We're up really nicely on both of those trades. And the NASDAQ, look how overbought this stupid thing has been. Okay. And every time it cranks down here and we start to fall and the momentum picks up, we get big selling weeks ahead. I think this could be the start of another selling week. We'll be looking at the 21 to 50, and we'll be looking at this trend line to see, well, what is actually going to hold up here. Plenty of support areas here. Okay, don't go into the bomb shelter and stock up on water right now. But what I want you to do is I want you to be cautious. So, red background, a losing day today. I dropped $475 on a $530,000 account. I will live to play again another day tomorrow. We actually have BP to spend. I will look to see what shows up tomorrow, but we added multiple trades today, and I think our portfolio is right where we want. All right, if this was helpful to you, click the like button down below, drop a comment, be happy to read those. If there were, if there's a good question in there worth responding to, I will try to respond as best I can to you guys. I'm not here to give you financial advice, but I'm happy to read your comments down there. I can't tell you how to manage your trades. Okay? You have to be able to do that. If you want to learn how to do that even more in depth, come join us in the Discord, where we're giving you trading lessons every single day and a ton of knowledge. All right, we'll see you guys later. If you're not a member here of the YouTube channel, subscribe. Help me out, help others out, and be on the list to get new alerts, because I'm coming out with a new video, maybe even later tonight, but for sure in the morning, about chasing the shiny object, which I need you to stay away from. Okay, turn off your Facebook. Okay, turn off your Twitter. Okay, stick with me, and we'll make you rich. Bye-bye.